Moving point four, we talk uranium here on this show quite often. Here we have this again. Cameco, I should have asked you first, Gary. Is that the
So I
correct?
think it's pronounced Cameco.
Okay, I figured it was probably going to be one of those unique ones.
Yeah, some people call it Camco. I believe the proper pronunciation is Cameco, and if I'm wrong, I'm sure someone will correct me in the
leave a
comments.
comment. We're
But
really opening ourselves up to quite a bit of scrutiny after this.
but in fairness, Rob, this is the silly people saying silly things issue. We
That's right.
can do that this week, but yeah.
I can include myself in that underneath that umbrella. So, anyways, point number four, we'll use ticker CCJ. Light on production has to buy spot uranium, and they're one of the world's largest uranium producers.
Yeah, so let's talk about uranium for a minute. It's been a big subject at Deep Knowledge Investing. We started buying uranium through a particular ETF a little over a year ago. That, for me personally, has been a massive position. I bought a huge position, and the price of uranium is more than doubled in this time. The value of the ETF that we own is more than doubled in this time. So I've gone from having a huge position to more than twice a huge position in this. We're sitting on huge profits in the name. And again, like Shockwave, I haven't sold any of that. And the reason for that is because we are going to be looking in the next year at all-time highs in worldwide nuclear energy production. The new Gen 4 plants can be smaller. They don't melt down. They not only do they not produce nuclear waste, they actually use nuclear waste. And, we've pointed this out before, for the environmentalists listening to this, if what you want is reliable baseload generation without carbon emissions, nuclear is the option. This is the way to go, and uranium is the fuel for it. And again, for the environmentalists, if you want people, if you want the electrification of everything, right? You want people using electric for heat, electric for their stoves, and electric for their vehicles. This is what you need to do to have a reliable grid. You can't do all of this on solar and wind. That's just not reliable baseload generation. You can use that for peakers at times. So what we're seeing is a lot of nuclear plants being built, older plants being, instead of being decommissioned, the useful life is being expanded. And so we have this increase in nuclear plant use or energy demand. And it takes years and years to bring on supply, to get things permitted and to build new mining capacity. And so right now, every year, approximately 20% of the world's uranium storage is used up for existing, basically it's for existing supply. And so every year we're working down our stockpiles by about 20%. At this point, there's 4, maybe 5 years of supply left. And so what's going to happen is either a giant increase in the price of uranium, or alternatively, people are going to have to mine more. But as we pointed out, it's going to take a while to get that mining capacity online. So that's Deep Knowledge Investing's positive thesis on uranium. Now, what happened last week is Cameco is one of the world's largest uranium producers. They mine. These are the guys you look at if you want to know what's happening in the uranium market. Now, they had told people, they had given people a projection for how much uranium they were going to produce, and then they lowered that projection, and then they fell short of it. And so if you fall short of your production goals, Rob, where do you go? You go to the spot market, right?
Yeah.
And so I'm making up numbers. These aren't the exact numbers, but let's imagine you've sold supply contracts for 20 million tons of uranium and you produce 17.5 million tons. Well, guess what you have to do? You have to go in the market and buy another 2-3 million tons of uranium. And Cameco came out and they said, we're looking at increasing production over the next few years. We're thinking about it. We're examining it, but they haven't really done it. And they gave you their projections for 2024. And guess what they told you? They told you that they're going to produce less uranium than they have supply contracts for. And so it's going to happen again. You have one of the world's largest uranium producers that last year had to go into the spot market and buy because they don't produce enough. And they have these long-term supply contracts. The same thing is going to happen again this year. And so that is going to put more pressure on the price of uranium. That's upwards pressure, right? The only way this pressure is going to be alleviated is we have a giant worldwide recession and energy demand falls off a cliff, which maybe it could happen, but it's pretty hard to shut down a nuclear plant. Or more likely, at some point, people are going to say we need to produce more uranium. But again, those projects take years to come on. Now, here's where we think the market got it wrong. When Cameco announced earnings, the price of uranium fell that day. It went down substantially. And, look, the market often, the expression, we've talked about this before, is buy the rumor, sell the news, right? So we weren't the only ones who knew that uranium supply and demand is out of line. And there might have been people saying, okay, great, Cameco, they can't produce enough, or they're choosing not to produce enough. They're going to go into the spot market. And that's fine, but that news is out. And so, they might have been selling, and, we just view these things as buying opportunities because long term, the only thing that's going to happen is the existing stockpiles keep getting run down and down and down. And so again, we want to own uranium into that. I think the market reaction on this one wasn't the right one. And needless to say, we did not sell a single share of the ETF that we used to get uranium exposure.
Was it a misunderstanding of Cameco coming out and saying that there's not the demand for the increased level of supply, that they didn't meet with the spot purchases? Or so is that just a misunderstanding in the market, seeing that as a decreased demand side issue?
It's hard to say. Frequently when things happen in the market, you can come up with all kinds of reasons. Sometimes people do misunderstand things. In general, it's dangerous to say, everyone else is dumb, everyone else is wrong, no one else understands. It could have happened. In this case, without clarity, I'm reluctant to make any kind of accusation about anyone else. I think the market was wrong on it. In terms of, individual portfolio managers, I don't know. Part of it also just might have been the short-term trading dynamics. The price of uranium has gone parabolic. I'm looking at the chart right now. If we go back to as recently as last May or June.
Yeah, May.
Yeah. So uranium was at basically $50.
Right around there, yeah. Hovered for all of
And
beginning of 2023.
Exactly. And now it's over 100. So, I think what's happened is the price of uranium has more than doubled in less than a year.
Sure.
In about 3/4 of a year. And so, again, it may just be some short-term trading dynamics, some of that, again, buy the rumor, sell the news kind of thing. If you're a day trader, yeah, these things matter. But, my thesis on uranium, our thesis on uranium, it's a long-term thesis. I plan to own this on a multi-year time frame. So, we just, as long as we understand what happened, and when we looked at the Cameco earnings and more specifically their production versus their supply contracts, it just seems to me like that was confirmation that our long-term thesis on this continues to be right. And, we just use these moments as an opportunity to buy more of the things that we like.